Why is it so heavily regulated, Tommy?
Trust. I mean,
Trust.
If you're going to bring me your money, you've got to have a certain amount of trust in that institution. The government has to make sure that banks live up to this whole concept of trust, because without that, the banking system would just not be a viable alternative.
Right.
And if you can imagine trying to be a business person or even a consumer and needing to go somewhere to borrow money so you can buy that house, there's got to be a stable, secure, and trust mechanism in place that allows for people to go out and borrow money, and the banks provide that vehicle.
Right. Was it that trust component originally, Tommy, that got you interested in the industry? What was it that actually spurred your interest 20-some years ago?
Living in a small town, I was doing a few real estate investments myself. I was dealing with a banker. Just loved the whole idea of banking, and got to know, and in a small town, particularly a long time ago, a banker was probably one of the most trusted people in that community.
Yeah.
And I would still like to think that for the most part we are still that way.
Right.
And when you use the term bankers, there's all kind of bankers. There's mortgage bankers and commercial lenders, and stock brokers, which kind of fall into that category. But day in and day out, I just think that the average banker is required, and the expectation for them is to be one of the most trusted type of personalities you can ever deal with.
We've had some bankers with us recently, highlighting Mary Jo Rogers with South Atlantic Bank, Wayne Gray with Tidelands Bank, some other folks highlighting some of the basics that folks have to go through. What are some of the things you look for, let's say on a commercial loan, Tommy, if I wanted to open a restaurant or and maybe didn't have a lot of restaurant experience, what are some of the things, we got about 10 minutes, what are some of the things that you look at when you're looking at if I've filled out some forms or otherwise to try to get a loan, what are some of the things you're looking at specifically on my loan application?
Well, when you move from a consumer purpose loan, which is a little bit more process driven, debt to income, credit score, loan to value, those kind of things. When you move into commercial lending, I like to say that every deal is a new deal. In other words, it's not process driven. You really have to underwrite, number one, management and character. If we're looking at making a commercial loan to someone, if we can't get past character, is this person trustworthy? Is this person someone that's got a legitimate plan? Are they forthright and honest in what they're telling us? If we can't get past that for whatever reason, nothing else matters. We're just not going any far. Now, once you get past the character piece, the next thing is cash flow. There's two parts to determining whether a loan is a good loan or not. One of them, of course, is the character, and is there enough cash flow? But in addition to that, sometimes people will want to pay you, that they have the desire to pay, but they don't have the ability to pay. And those two things are totally separate. In some cases, we'll find someone that has a desire to pay but don't have the ability, or vice versa. They have the ability to pay, but they don't have the desire to pay for whatever reason.
Right. Yeah, whatever that is.
But if that comes together, if they have the desire and the ability to pay, and we try to determine ability, character will tell you whether they have the desire to pay.
Right.
Cash flow, understanding where that money is coming from, the service to debt, because keep in mind, collateral value doesn't repay a loan. There are asset-based lenders, or what some people refer to in the industry as hard money lenders, that will lend you money on nothing but the value of that underlying collateral.
Right.
And if you got the money or don't have the money, it's immaterial because they're planning on liquidating that collateral. Banks are not that way. Banks can't depend on collateral. We have to depend on the ability to repay us and the cash flow, because at the end of the day, nothing else will repay a loan. Nothing else but cash. You've got to have cash to keep making those payments.
Yeah.
So we spend time on that, and then of course all the other things that you would normally think about. Is it a viable plan? Is it a good location? Is there experience within the management of that company? So you factor all those things in, and then you hopefully end up with a credit that works.
And that's virtually the same thing for all commercial lenders. They're looking for the same things.
Should be.
They should be looking for the same thing, and that would cover the gamut from a small community bank with one branch or one main location up to a large bank with thousands, tens of thousands of branches.
And the bigger the organization gets, typically the harder or the more rigid those underwriting requirements have to be, because you can imagine if you had 5,000 loan officers across 15 states,
right.
you've got to have pretty rigid controls, or you have everybody doing their own thing, and you don't have that consistency that you need. Smaller banks can be a little bit more individually driven.
Right.
And at a bank like ours, we're set up with regions. So in our region, myself or someone that's in my position somewhere else in the company in another region have a lot of autonomy. I mean, sometimes the numbers don't work. Sometimes you can't quite get your hands around some of the peripheral issues.
Right.
But you know the person. You know who they are. You know they're deeply rooted in this community, and you just have to take a little bit of faith out there. I mean, there is no one size fits all to commercial lending.
Right. Very good point. Very good point. So community banks, for instance, or smaller banks have that opportunity, as you say, to be a little more focused on the individual than just pure numbers.
That's correct.
That's very important. I mean, we've heard a lot about a credit crisis recently. That's surely an issue that's facing a lot of folks. Is that something that we need to be concerned about? What's the depth of the credit crisis? Is there really a credit crisis, or is it just a return to, what would it be, sound or more sound lending practices?
Well, primarily where the credit crisis is in the mortgage industry, that up till a few months ago, you could go into a bank or a mortgage broker's office and you could get a low doc loan or a no income verification loan, or you can get a 100% loan. These were things that was unheard of, just a short time ago. Well, as that real estate bubble started to swell, over time, the terms or the underwriting became more and more liberal, to the point where, if you had a heartbeat just about, you could qualify for a mortgage. Well, a lot of people was taking advantage of that underwriting weakness to be able to go in and buy a house they couldn't afford in some cases, or in some cases they were purely speculating because their neighbor or their friend had bought a house 2 years ago and it went up 20%, and they were just trying to buy a house thinking it was going to continue to go up.
Right.
Well, now the credit crisis, if there is one, is only limited to people that don't qualify under normal traditional underwriting standards. I can tell you that if you are a qualified borrower, there is no credit crisis at our institution.
Right.
There is plenty of money. I mean, listen, we're looking every day to lend money because that's the only way we have to generate revenues.
Right, to make money. Yeah.
So if you're a borrower with good credit, and if you qualify for a mortgage, and you perceive that a credit crisis, then call us. We'll be glad. We'll take care of it.
Right.
Yeah. But the only credit crisis would be in those really liberal type underwriting standards that cause this problem we're in right now.
Well, so oftentimes I'm sure folks are thinking, particularly what if they got a loan during the bubble? I mean, if they got a loan at the 100% or the no doc, should they, do they even want to bring that to anyone's attention or to highlight that?
As long as they're making their payments, it's totally immaterial.
Okay.
And you're going to have cases where some folks are upside down their mortgage. You've seen price devaluation to some degree, and maybe they paid $400,000 for the house, and today one just like it sold down the road for $360,000. Well, if that's their home, if they're living in it, they need to just keep on making a living, keep on servicing that mortgage, and not worry about what that day-to-day valuation might be, because after all, it is your home, not a true investment like stock or some other type of investment would be.
In an instance like that, just as you said, let's say the homeowner and they've got a very high rate, or one of those rates that's going to jump up. If for instance, an appraisal wouldn't hold that $400,000 valuation, if it's just worth $360,000, would they be able to maintain oftentimes, or is it, of course it's person to person, but maintain that if they did one of those 100% or no doc loans, would they be able to maintain that position and still?
Well, whatever their original terms were when they went into that mortgage, they would keep that regardless of any valuation difference in the collateral or in the house. So the danger they have if they didn't get a 30-year fixed rate, and keep in mind, when all this was going on, a 30-year fixed rate was under 6% for the most part on average. Well, maybe you got a 5 1/4 by getting a 5-year adjustable rate, or maybe you got a teaser rate for the first year at 3%, and then it was going to go up. Well, the only people that ever really appealed to was people that were speculating. The average homeowner, at least in my experience, has been when they would come in and they could see that they could fix their rate for 30 years at under 6%. That's what they would do. But for people that were trying to flip property, or people that was just really more investor focused, or for someone maybe that thought they could buy the house and afford this payment, and now they can't.
Right.
It took those adjustable rate mortgages. Those are the folks that could probably have some challenges because those rates will continue to go.
Right.
Now, having said that, though, even today, 5-year ARMs, probably well under 6%. So, you got.
Is that right?
Yeah.
And a 30-year fixed
30-year
rate
under 6%.
is a great opportunity for folks now.
Oh, yeah, absolutely.
If they've got some credit worthiness, it's a good opportunity
That's right.
to get into a bank, whether it's SCB&T or down the street,
That's right.
Horry County State Bank, or all the plethora of banks down here on the corner of 21st.
There's no shortage of banks. They'll be glad to help these folks.
Well, that is exciting. There's some new banks coming to the market as well, Tommy, with the addition of South Atlantic Bank, I believe, and Coastal Carolina National Bank, and Cooperative Bank. There's a lot of banks coming onto the scene. What is it about Myrtle Beach that's so attractive?
Those baby boomers. People.
Baby boomers.
Listen, everybody believes that the baby boomers that have been, visiting our area for 20, 30, 40 years, they want to retire and they want to live in this area, and why not? So, okay, we're going through a cycle now, but this too will pass, and when it does, long term, we believe that there's going to be a ton of opportunities in the Myrtle Beach market, and that's just indicative of what our market is. I think to see all these banks, flocking to Myrtle Beach.
That's exciting for you and SCBT and so many others. Thanks so much for being with us this morning, Tommy.
Thank you, Greg.
Don't crush my hand again at 7
Sorry
a.m. My
about
Lord,
that.
they're doing it right here at SCBT. Stay tuned to more Carolina people with Regional President Tommy Bouchette coming up next. You heard him say it. Those are such simple words. Banking is all about trust. It's all about trust, whether you're banking at South Carolina Bank and Trust or you're banking down the street at one of the other amazing local, regional, or national or multinational banks. There's a tremendous place to place your dollars, whether it's moving them from underneath your mattress into a bank or moving them from one bank to another. Just recognize it's all about trust. Take the time to learn more about South Carolina Bank and Trust at scbtonline.com, scbtonline.com, or stop in to see a local banker or go to any area bank. You'll learn more about trust with bankers just like Tommy Bouchette. Tommy, thanks so much for being with us this morning. Absolutely.
Thanks,